And so we think demand is really off the charts and well in excess of what any capacity, Tesla and the industry combined can really serve right now.
They're on track for record deliveries, record profits. Simply put, Tesla's got manufacturing capability and supply chain relationships no one else has.
Nobody here believes you or agrees with you on the bullish call.
But in this video, Tesla stock goes vertical as the stock market has time to digest their epic Q2 earnings and forward-looking statements. I'll be reacting to some of the mainstream finance media and analyst reactions to the earnings beat, and also taking a gigantic risk by talking about where to from here for Tesla stock. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. As we can see here, Tesla stock surged today following their epic earnings up, hang on. Oh, that's Nikola Corporation, up 7.3%. I think there's a lesson here. Oh, that's right. The bell curve is definitely real. Here we are, that's better. Tesla stock up 9.78% today, up over $69 per share, as the stock market has a little time to digest their earnings. I'd also like to offer a special round of applause to everybody who's still waiting for Tesla stock to dip, despite the fact that it's been near 12-month lows despite almost flawless execution over that period of time. Good job, guys. Keep waiting, and I'll keep mocking. Meanwhile, still buying with every spare cent. I think I picked up 52 shares overnight. Again, if you don't know where this money's coming from, head over to Patreon, check my videos on my money printer, everything will make sense. Despite the fact that Tesla's now up a couple of $100 in the last few months, and I really mean it by the way, 24th of May, Tesla stock closed at $628 per share, up almost 30% from that point, and still, in my opinion, the best risk-adjusted opportunity that I'm personally aware of in the stock market. Following today's surge, Tesla stock is still down about 30% from its recent peak. Year to date, Tesla stock's still down over 32%, and over the last 1 year, up a mere 25.5%. I'd just like to take a quick moment here to remind everybody who's been watching how many times I have repeated the same fucking thing over and over and over and over and over. Tesla stock, best risk-adjusted opportunity that I'm aware of in the stock market. Don't say I didn't warn you. At $620 per share, at $720, at $820, at $920, at $1,020, at $1,120, at $1,220. It's still true. Now, it doesn't mean there's better opportunities out there. It just means that I'm personally unaware of any when I factor in the risk and the potential upside. There'll be many stocks that outperform Tesla over the next X amount of time. I just don't know what they'll be, and I'd much rather invest from a place of confidence and conviction rather than hope and uncertainty. But hey, that's just me. And as I mentioned in the intro, it's now time for me to share my thoughts. Where to from here for Tesla stock? In my opinion, at some point in the next few quarters, I personally believe it is inevitable that Tesla stock will surpass its previous peak levels. Of course, I could be wrong. After all, if I was making these kind of claims back in 2014, Tesla stock's likely to break through all-time highs, I would have looked like an absolute moron for a period of over 5 years, as we can see on this chart. To put the Tesla stock surge in perspective, today the Nasdaq 100 up almost 1.5%. Tesla clearly outperforming by an enormous margin. Amazon stock up 1.5%. Apple stock up 1.5%. Alphabet stock, Google's parent company, fairly flat. Rivian stock surging 4.25% today. Lucid stock up 1%. And the ARK Innovation flagship ETF up 1.75%. Clearly, Tesla had a rather good day. And now onto a supercut, some of the mainstream finance media reactions, and also some of the Wall Street stock analyst reactions to Tesla's epic Q2 earnings.
Well, I think the big focus is really the reiteration of the 50% unit growth, because everyone knew April and May, a disaster for Tesla given the zero COVID shutdowns. Will they reiterate 50%? That's showing bullishness second half, 900,000 plus. And I would just call it less bad than feared, and that's why you're seeing the reaction.
Well, that seems to be the case in a lot of stocks that are reporting earnings. Gross margins, though, from 33% in Q1 to 26.2% after some stuff is figured out there. You're not concerned at all about a gross margin number that's declining?
Now, I don't want to be too hard on Scott here for not knowing what the actual fuck he's talking about, but Scott definitely doesn't know what the actual fuck he is talking about. This is what a knee-jerk reaction looks like. This is what speaking before you've done your homework looks like. This is what a lack of context looks like. Tesla's margins declined. They had a factory shut down against their will in Shanghai for almost a month, lost 100,000 vehicles of production while simultaneously ramping 2 new enormous factories. You would literally need to be a fucking potato to not understand this if you actually looked and understood what was going on. But of course, the mainstream finance media, depth, discussion, context, understanding, oh no, f that man, let's just throw our opinions around, we don't know anything and let's just keep talking. This is why I call these folks talking heads. They do a lot more talking than they do thinking. And again, I don't want to be too hard on Scott here. He's got producers, alright, they're feeding him all this information. The guy clearly knows nothing about Tesla and only knows what he's told. So again, it's not Scott's fault that he doesn't know what the f he's talking about, but clearly he doesn't know what the f he's talking about. It's embarrassing that this question was even asked.
Yeah, it's concerning if it continues. If you go into 3Q and 4Q and you see that trend line, then it becomes a concern. Because of 2Q, I'll say they got a little bit of a pass because of what you're seeing on the zero COVID situation in China, as well as some of the build outs of Giga Berlin and some of the other areas, of course, Austin. And I think that's why investors are sort of looking through this. What's the second half telling us? Do you believe the second half? Because it comes down to that's going to be that's what the street's going to be focused on, bulls and bears.
How much visibility, though, could they possibly have into a second half where the cash burn on these new factories is going to continue? It's not like supply chains or inflation are going to go away overnight that are going to help material costs. And by the way, what the stock is doing right now is hardly a resounding, let's get the pom-poms out and start the cheers. I mean, okay, 2.5% move on a stock that's gotten hit pretty well.
For those unaware, Scott was referring to Tesla stock's move after hours following the earnings report. We obviously know these comments didn't age particularly well, with Tesla stock surging almost 10% today. But again, I just want to point out the idiocy of this kind of comments. It appears, and I could be wrong here, but it appears that Scott is under the impression that the stock market perfectly mimics reality. If the stock's not up a huge amount, it can't have been a great quarter. If the stock's down, it must have been a bad quarter, right? It's the only possible explanation. For those of you who are long-term Tesla stock investors who've been paying attention to what the stock does versus the quarterly results, you may have noticed there is almost zero correlation between Tesla's quarterly results and what the stock does. It's extremely rare for Tesla stock to behave as you might expect after earnings. But hey, don't take my word for it. Go back historically. Look at the analyst consensus opinions and expectations versus what Tesla did, and then what happened to Tesla stock in the 24-48 hours following. You might be surprised. I'm sure Scott certainly would be.
It's an Everest-like climb from here to get to where we need to get to for second half. So they really need to prove that. And it's not just the demand story, it's production. Because if you look at China, that's the hearts and lungs of the Tesla story. So it comes down to the elephant in the room, the fear is what happens if April and May, the shutdown, happens again?
This is definitely the most legitimate and reasonable potential concern/risk for Tesla over the short term. If the utterly brain-dead officials in Shanghai decide to forcibly shut down factories again in a futile fascist attempt at COVID zero and or accidentally starving half their population to death because they can't access food, and let's not go there, it's definitely possible that the Shanghai government could fuck Tesla without their consent in every possible orifice at the same time. This won't be great for Tesla. However, they now have 4 factories operating on 3 independent continents. If the Shanghai factory is shut down, sure, it sucks. They've got 3 other factories, so not as big of a deal as it would have been 24 months ago. Of course, this is short and medium term at most, but it is a risk to be conscious of. It's possible, and this is totally out of Tesla's control.
And the stock's already down about 30% year to date. So, we put out a report a few weeks ago looking at the long-term opportunity. We think investors will do very well looking ahead a year, 3 years, 5 years down the road by buying Tesla around these levels.
Clearly, I agree with Garrett in terms of the potential for Tesla stock with a longer-term investment horizon, but I also need to give some credit. It's amazing to hear a Wall Street stock analyst suggesting that Tesla stock investors have a longer-term time horizon. He literally said 3 to 5 years into the future. This is an impressively long-term horizon given most of Wall Street is more interested in what's happening this quarter and next quarter, maybe this year at most. And of course, that time perspective, which is embarrassingly short, is still eons beyond CNBS's typical micro-penis length time horizon. What's happening yesterday and in 3 seconds? So, round of applause, credit where it's due, Garrett. Nice to hear somebody on Wall Street suggesting investors look at least 3 to 5 years into the future. I would expand on that, however. I personally think at least a 5-year time horizon at minimum. I think most Tesla stock investors certainly should be looking next couple of years, next 3 years, next 5 years, but more than that, at least the next 10 years. I personally privately model Tesla stock out over a multi-decade horizon. Further into the future, the greater the further degree of uncertainty. However, if you're a Tesla stock investor or you invest in any company and you're not modeling out as far as you reasonably can into the future, being aware that yes, the further into the future, the higher the uncertainty, if you're not at least modeling out a couple of decades into the future going, what if, you're a moron. Or you're not an investor, you're a trader who thinks they're an investor, mistakenly. It doesn't mean your modeling is going to be right. I mean, of course it's not. But you've got to do the exercise and at least consider the implications. A great example of this, I don't believe there are many investors in the marketplace, and very few analysts on Wall Street, if any, who even consider it a possibility that Tesla could be growing, say, revenues at a rate of 20 or 30% at the end of this decade. Please correct me if I'm wrong. I'm unaware of a single analyst who's made this claim. But if you actually do the numbers, you factor in the implications of things like robotaxis, FSD, and that's right, Tesla bot, although it's really going to have a much bigger impact in the later half of the 2030s and beyond, you can see the potential for Tesla to still be growing around 50% per annum. Yes, I know this sounds insane if you do the math. I think one of the major mistakes a lot of stock investors make when assessing companies, especially Tesla, is they look for historical examples. Oh, well, okay, what if I assume it is a growth company? What's the fastest a big company's ever grown ever? Tesla could never grow faster than that. I'm not even going to bother modeling it out because obviously it's impossible. I don't even need to check. Big mistake.
Based on the delays that buyers are seeing from Tesla, I expect demand is very high right now.
Yeah, it's an important element that I think a lot of folks are missing around EVs. Some of the recent studies that we've seen are looking at 14% of consumers are looking to buy an EV. In the U.S. and Europe, we see the delta between an internal combustion engine and a base vehicle and an EV being around $16,000-$17,000 right now, with the advantage to EVs in terms of total cost of ownership. And so we think demand is really off the charts and well in excess of what any capacity, Tesla and the industry combined can really serve right now.
Absolutely agree, although I don't think I've ever disagreed with anything Colin Rush has ever said about Tesla. Seriously, more credit where it's due here. Without question, Colin Rush is the smartest, biggest brain analyst covering Tesla stock that I'm aware of. Maybe I'm biased because he tends to think the same way that I do, although there's obviously a key difference. I'm an obnoxious, arrogant, hyperbolic twat, and he's reasonable, measured, and grounded. But we seem to draw very similar conclusions, think similar things, although Colin is a little bit more reasonable, less optimistic, and a bit more skeptical, especially around claims like the Tesla bot. But mark my words, if Colin is still covering Tesla in 5, 10, 15 years' time, I think his thoughts are going to be a leading indicator of eventual Wall Street sentiment. The guy seems to be years ahead of where most of his colleagues are in terms of understanding Tesla, electric vehicles, the benefits of autonomy, and the implications in terms of profitability, etc. Colin is an absolute beast. I mean, as we can see here over on Tip Ranks, the guy's just on another level, nearly 5-star, not again, my life, every time. There we go, that's better. Colin Rush of Oppenheimer, ranked number 3. Yeah, number 3 out of 7,943 analysts on tipranks.com. Number 3, average return over the past 12 months based on stock recommendations, a mere 55.6%. Tesla stock with a buy and a $1,293 price target, almost 60% upside from where we are today. What's more, if we click into the Tesla stock coverage here, let's bring it all the way back to day one. Back in 2013, initiated with a buy on Tesla stock. At no point has Colin Rush ever suggested any investors sell Tesla stock. At worst, it's been a hold. Justifiably so. Model 3 ramp, production hell, a little bit of uncertainty around there. Colin has understood the potential of Tesla from day one. You can see here from the stock recommendations. Had you listened to Colin back in 2013, you would have been buying Tesla stock at $6.93. Had you listened in 2014, you would have been buying at $35. Had you listened in 2015, you would have been buying at $49. In 2016 at $44. In 2018 at $69. In 2019 at $46. Need I remind you today, Tesla stock currently at $815.
So we think pricing is going to continue to be strong, and we'll see how some of these other platforms ramp up and what sort of hiccups they run into.
Colin, what do you say to those like Boris Schlossberg last hour who mused we may never see 1,200 again for Tesla? How do you justify a price target above that level?
Yeah, this is a really important question because the earnings leverage and the margins are really what get us there. There's, certainly well north of $50 of earnings power on this platform as they scale up to multiple millions of units a year in terms of production, and start layering on some of the recurring revenue that they could with insurance and the full self-driving. And so as we look at that and the multiple that you can put onto that that sort of earnings power, there's easily room to get to our price target here.
And again, a reminder, Colin's price target $1,293 per share for Tesla stock.
Well, look, it's great news for Tesla and Tesla investors. Everybody thought it's going to be a soft quarter. We knew there were supply chain issues combined with COVID closing the China facility for 22 days. And we saw 254,000 units delivered, 50,000 increase year over year. That's 40% growth. But the big surprise was revenue and profitability. They hit 16.93 billion. That's 40% year-over-year growth. But the biggest news is largest car deliveries in history in June, which says they're really ramping up to the back end of the year. I think they're on track to deliver 340,000 units in Q3. I think they're going to hit 500,000 in Q4. If they do that, it'll be closer to 50 to 60% growth. Keep in mind, analysts were predicting profitability of about $1.81. They hit $2.27. So they're on track for record deliveries, record profits. Simply put, Tesla's got manufacturing capability and supply chain relationships no one else has.
Can they really make twice as many vehicles as they made in the first half of the year and the second half of the year?
This is a very important question to ask. Of course, the answer is yes. It won't be easy. But then again, what has Tesla done that was easy?
Without a doubt. And here's why. Most of the other car companies, General Motors, Ford, they have one electric plant that's going online, maybe another one in 2 or 3 years. Tesla now has 4 plants up and running in California, Austin, Shanghai, and Berlin. And all 4 are running. Austin and Berlin are going to be pumping into big numbers by the tail end of the year. But that's only part of the story. The other key part that investors should understand is the biggest component in electric cars is the battery. Tesla was the first to bring battery production in-house. With their new 4680 technology, they appear to be the technology leader. They're taking the cost curve batteries down faster than anybody else. And on top of that, they're the leaders of providing what's called OTA, or over-the-air software services, that are dropping bigger profits to the bottom line. And again, the big story is profitability was way beyond what analysts saw. And I know a lot of people say, this Tesla stock price is crazy. This is an anomaly at how capital markets work. But the fact is, if you're growing at 50% a year from these big numbers, 53.6 billion to what I think is going to be 86 billion, and you're more profitable than any other competitor in the market, you're going to have a share price that's the envy of the industry.
Steve is absolutely right. I think his smile at the end there really sums things up. Tesla's rate of growth is absolutely astonishing for the scale the business is already at. There are very few exceptions to the rule that if you hear somebody say that Tesla stock is overvalued, they don't believe that Tesla can continue to sustain these kind of levels of growth. Instead of thinking, they just default to, wait a minute, no company this size has ever grown this fast for this long, can't continue, therefore it's not possible, therefore Tesla stock's overvalued. This would be an awkward moment to remind everybody that there's been people saying that Tesla stock has been overvalued since 2010, when it was $6 a share. Really? And why? They didn't anticipate the future growth. Case in point, one of the near limitless examples of the Dunning-Kruger effect, where an investor thinks they're smarter than they actually are. This is absolutely hilarious. This doozy is almost a decade old. Mark B.S. Spiegel, under the hilariously ironic username of Logical Thought, tagged as a short idea. Quote, why projections for Tesla to sell 500,000 cars in 2020 are absurd. Summary, quote, the sell side is forecasting that Tesla will sell 500,000 cars in 2020. By the way, spoiler alert, despite a fucking pandemic, they hit this target. Just saying. If Tesla sells 35,000 cars this year, 500,000 sales in 2020 would imply a 6-year compound annual growth rate of 56%. No complex product manufacturer has ever grown that quickly from a revenue base of $3 billion or more. Wall Street's bullish projections for Tesla Motors Inc. show the company accelerating from selling 35,000 cars this year in 2014 to 500,000 cars in 2020, which would imply a 6-year compound annual growth rate of approximately 55.8%. Because my brain is tiny, and I like to reason by analogy, and I also think I'm a lot smarter than I am, clearly this is absolutely impossible, right? Oh, sorry, I misquoted. To put this number in perspective, here we go, an analogy, a historical comparison, never wise. Microsoft, a software company and thus a business with no issue in scaling production, although physical distribution and customer service were certainly issues, as they are with Tesla, first broke $3 billion in sales in the fiscal year 1993, generating $3.7 billion in revenue. I'm using the $3 billion revenue base because that's analogous to where Tesla is now. Look at this again, Dunning-Kruger effect. 6 years later, Microsoft did $19.7 billion in revenue, which is a compound annual growth rate of 32.1%. Conclusion, even if Tesla were able to grow as quickly as Microsoft did in its prime, an absurd scenario for a non-monopolistic, non-software company, it would produce only 186,000 cars in 2020. And as we can see here, Mark Spiegel, with his logical thought, putting his big brain to full use, determining that it's literally impossible. In fact, it's absurd for Tesla to even grow a fraction of what they're planning to, because no one's ever come close to this. Therefore, it's literally impossible. And I don't need to think any deeper than that. After all, it's only logical, right? And as we know, this didn't really age well. This is the same kind of thinking, different flavors, but it's the exact same kind of thinking, just about everybody who thinks Tesla stock is overvalued today is going to, oh, no one's ever done this before. Let me find an example. No one's done it. Not possible. The end. I'd just like to read the bio here as well, just for the record. My name is Mark B.S. Spiegel, and I'm the Managing Director of Stand Still Capital. Disclosure, the author is short Tesla and brain cells. Wait, I think I misread that. Anyway, let's move on. Naturally, in the intervening years, 8 of them, in fact, since this clown self-immolated on seeking alfalfa for the world to see, there's been so much contrary data demonstrating that Mark's logical thought was anything but, that he's completely changed his tune. No longer thinks anything about Tesla is absurd, and has eaten his word saying, you know what, I was wrong. Tesla's grown faster than I ever could have imagined. Therefore, I'm going to stop thinking along these lines. In fact, I'm going long Tesla stock. Unfortunately not. I think Mark's projection of his own self-hatred onto others has clouded his ability to clearly see things. It's gone from no one can grow that fast to, well, obviously Elon Musk's a liar, the company's a fraud, and the competition is coming. The guy's still shorting Tesla, still anti-Elon, still anti-Tesla. Still, today, 8 years after that self-immolation. The goalposts just keep changing because this guy is emotionally invested in being right. He wants Tesla to fail. Talk about some logical thought.
What investors need to look at, who's selling the most and who's growing the fast. The answer to that question is Tesla. Who's getting the smartest in bringing battery costs down and doing more, selling more over-the-air software services? The answer to that's Tesla. Whoever wins the electric car race is going to own a 50-year franchise. So you're going to need to keep your eye on the ball. Tesla's sitting pretty now, but a lot of serious people are coming after you. So we'll have to be on our toes, and I hope Tesla's up to the task. I want to see an American company win.
I'm positive on Tesla. This was a negative quarter. There were a lot of headwinds that they had, and I want to just add a piece that they had a tailwind related to gross margins, and that did not offset some of the impact on gross margins. And so when I think you put it together, you need to be realistic here. And ultimately, the question comes down to these issues that have impacted this pressure point around gross margins. Are they transitory? Are they something that the company can work through? My sense is it will take a couple quarters to get through these. So we start to need to think about 2023 in terms of when we start to really see some lift on the margin side. And I just want to quickly frame in why that matters. Why are we talking so much about auto gross margin, ex EV credits? I'm a believer that Tesla is a tech company, and that belief is based on a margin profile similar to other tech companies. So to the extent that they can perform on that and continue to expand margins, kind of bodes my case for this being valued more like a tech company. And the reverse is happening right now for understandable reasons. But I think when you put this together, it was a headwind for this quarter. It doesn't change my belief. And I would just leave the thought, I'm still bullish on Tesla because I think they can't keep up with demand. And I think that's ultimately, they may or may not hit that back half of the year number because of production issues, but they're going to continue to gain share.
Nobody here believes you or agrees with you on the bullish call.
Well, isn't that surprising? The well-informed folks at CNBS who've never been anti-Tesla, don't have emotional responses to Tesla or Elon Musk, definitely don't own any legacy automotive manufacturer stocks, and have been right about Tesla every step of the way, don't believe that Tesla can't keep up with demand, and don't believe that they will continue to grow their production and scale at a ridiculous rate. How surprising.
But you've made a great call. Gene, it's Karen. Let me just ask you about this gross margin issue. Do you think that part of the solution or the expansion of gross margin comes from a higher sticker price? Or do you think they're going to be able to operate more efficiently?
Now, I'm not sure if Karen is genuinely asking this question because she's curious and she doesn't know the answer, or it's just a little bit of a softball, a conversation starter for Gene Munster. I got a funny feeling, however, this is an example of very shallow thinking. Karen, 1. Lithium-ion batteries are on a predictable decline in cost curve. In addition, economies of scale are a thing. The more things you make, the more things you buy from your suppliers, the cheaper you can buy them per unit. You benefit more from efficiencies. This is why Tesla's margins are increasing as their production increases. And then there's the whole, Tesla innovating in terms of manufacturing, deleting parts and processes. If you delete a part, delete a process, delete a robot necessary to make the vehicle, it becomes cheaper to make the vehicle. It's evident to anyone except a potato that over time, the cost for Tesla to produce their vehicles on average will decline, economies of scale, declining battery costs, and it's a very new technology that hasn't been manufactured at scale for decades. These things should be obvious to anyone who does the homework. And I understand not everyone does the homework, but if you do the thinking, you go, well, fair point. We'd make nice vehicles for like a century. A lot of innovation in terms of cost happened. EVs, not so much. They're still deleting parts and processes at a frantic rate. So I'm not sure if Karen was genuinely wondering, hey Gene, in order for you to be right about this, in order for Tesla's margins to increase, do they have to increase their prices higher and higher? Is that how they get higher margins, Gene? I'm not sure if she was seriously asking this question, or like I said, it was just a conversation starter, but holy fuck. If she's seriously unsure about this and actually was asking because she didn't know, no wonder she owns GM stock. That's all I'm going to say.
It's the efficiency piece. There's been essentially 3 different headwinds that they've had on the gross margin. One, of course, was the shutdown of Shanghai. That's just a huge headwind. There's the FX impact of that, and then also costs related to ramping Berlin and Austin. And so I think that, again, it was more of a negative impact than I was expecting it. This is a negative. This wasn't just about a lot of bad things thrown at Tesla. It was worse than what I had expected. But I do believe that over the next 6 months, they're going to work through a lot of these, and we're going to start to see a revision higher in terms of gross margin.
So, Gene, it's Tim. So the street, I think, is around 1.35 million units to the year. Tesla's numbers up 60% imply about 1.5. If you look at where they could be with Texas and Berlin, if you look at annual capacity, is there a surprise to the upside? Again, I think consensus is below even where Tesla has guided. Where are you?
I think that over the next 6 months, there's probably more risk to the numbers, to those delivery numbers, in part because essentially they're gonna have to re-accelerate pretty significant, or not significantly, but it needs to be just slightly above 50% for the back half of the year. And we're still coming out of these shutdowns, and we're still just in the phases of ramping Berlin. And so I think that I want to be clear is that I think the next 6 months, there can be some softness to these delivery numbers because it all comes down to how the world is going to, align for them to produce more.
This is definitely a fair point from Gene. There is a lot of risk and uncertainty, multiple factories ramping, the potential of the fascist shutdowns in Shanghai again. So Gene makes a fair point here. However, in the scheme of things over the longer term, this is all completely fucking irrelevant. What's relevant is the S-curve, the ramp, the overall trend and shape. If you shift the production increase, the S-curve, a few quarters this way or that way, it doesn't make a fucking difference over a long-term horizon. It'll certainly trap a lot of foolish investors who only look a few quarters into the future. But whether or not Tesla loses a bit of production in Shanghai again later this year, whether or not Austin and Berlin take a few more months or quarters to ramp up to volume production, really doesn't matter. What matters is, do they get there? How fast is fairly irrelevant. Does it take an extra few months, an extra few quarters? Big fucking deal. Seriously. This is something that Elon himself has stressed over and over and over on Tesla earnings calls. It's very hard to predict the exact shape and timing of an S-curve. But the trend is what matters.
But I think what's more important is just that the market has a flashlight that looks into 2023. I think we forget that when we get our heads wrapped around these quarterly earnings. The question for me is not about what the margins are this quarter, what they're going to be next quarter, what the deliveries are next quarter. It's more, what are they going to be in 2023? And I think 2023, we're going to see expanding margins and separately deliveries that are going to be in that 50% plus better range.
Again, I completely agree, and Gene Munster makes a great point about the short-sighted, short time horizon, short on brain cell perspective of many investors in the stock market who forget it's not about this quarter or next quarter. It's about the overall longer-term trend, and he's right. 2023 is going to be a breakout year for Tesla. But if you think 2023 is going to be ridiculous, wait until 24, when Austin and Berlin are ramped to high-volume production. Shanghai's massive expansion is completed. Fremont has eked out further incremental capacity, and Tesla is producing multiple millions of vehicles per year with ridiculous profit margins and still obscene wait times. Geez, this video ended up a little bit longer than I was expecting, so hope you guys and girls have enjoyed this. I always think it's interesting to see what is the mainstream finance media saying, what questions are they asking? What things are they unsure about? What do they believe? What are their thoughts? Oh, nobody believes you, Gene. You know, that kind of stuff. It's a good barometer for overall sentiment and also an interesting insight into how some people are misunderstanding the opportunity. I'm curious to know. Let me know in the comments below. Did Tesla stock's reaction surprise you, up almost 10% in the day following earnings? And has anyone been buying around these levels? And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment for up-to-date access to my Tesla stock price targets, well over 100 exclusive Q&A videos, and loads of other content and perks. See you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.